Oh my god, that was a pain in the ass. Alright, let's do that all over again. Okay. Alright, what's going on? Okay, cool. Alright, let's do that over. So I went through all the initial pleasantries. You know what I did? Listen. I just started using Streamlabs. Everyone knows that I'm always good for a mess up on a stream. And I hit live on the Streamlabs, and then I never did that on YouTube, so my mistake. All right, so let's go over it again. I just said what's up, did a sound check, and then I was like, I had to let the dog out. What? Okay, so I said hi to everybody, and you, Calvin, specifically. I asked if you were going to behave because I had mentioned a couple things. I see that you're really using up the airspace right now with the most responses in the chat. So I responded with a few things. One, footprint isn't esoteric. It's basic, man. It's the most raw information you can get from the market. You know, what moves the market, market buys, market sells. So that's all you're looking at. Just very raw data. Footprint, market profile. These are just not as common in crypto, but if you have a legacy background, you're going to be seeing these all over the place. So these are not special by any means, or esoteric for that regard. And then what else? Kelvin, you're in the spotlight. I don't know if that's a good thing, man. Have we abandoned Fuse, or was that a paid shill? I've never done a paid shill in my entire life. I've partnered with some companies in the space, but been very open about that. I've never done anything with a token. I make the joke that they couldn't afford me. So, no, I'm out of Fuse. I mean, listen, guys, I'm pretty upfront about my positioning. When things start to go south, like, I paper hand everything. So, if you ever see me share a chart and it's doing well, and I share it, and it's a week later, and the market is already coming back to, where I originally shared it, or where I said I entered, chances are I'm out by that point. I do not hold alts. I will chop myself up to death rather than hold an alt underwater, trying to get back to break even. Because ultimately, what I'll do is, if I get back to break even, I'll sell it and I'll just end up moving on. I just don't have the commitment. I don't research fundamentals enough to really hold out for better weather. I am a momentum trader with alts. I trade them intraday now, like I do BTC, and that's it. Chances are, if we talk about a position I was in yesterday, just across the board, even if we're just talking about Bitcoin, there's a high probability that I've been in a few positions since then, and that's really no longer relevant. So, no, Fuse was not a paid shill. I couldn't even tell you where Fuse is right now, but the funny story about Fuse was the last time I shared it on a stream, I sold it like 2 hours after, and I mentioned that. So, I mean, it is what it is. Some stuff is obviously ran, but I don't think we're in good market conditions, which I'll get to a point in a second with regard to that. So what's going on, guys? Sorry about the mistake earlier. Okay. What's going on? What's going on? Oh, you're just memeing. Oh, that's cool. So Adam was a member of Blockroots. So Adam originally reached out to me about order flow trading in crypto, and he was a member of Blockroots for a while. And Blockroots, for those that are not familiar, has an order flow and market profile course that I made a while back. Okay, cool. I'm behaving now. It's all good, Kelvin. You look like a nice kid, Kelvin. You're wearing a suit in your picture. If that's really you, you look like a nice kid. You look like you have a nice head of hair, a good tan. I mean, from the 4mm tall icon on the screen, looks like your suit's cut nicely. Got a nice taper. Some trap presence. Sound is bad. Sound levels overdrive. Okay. Let me turn this down. How's it sound now? Sound is distorted. I'm sorry about that, guys. Give me some feedback. I'm lowering the gain. Something weird happened. I turned on my Streamlabs, aside from the mistake just a second ago, and all my sound settings were changed to this weird string of characters. I don't know, man. Maybe the CIA is tapping in. Better. Okay, good. Yeah, I don't know what happened. I mean, I unplug my mic from time to time just to get it out of my way. But I didn't change anything. And Streamlabs has been a lot better than OBS. Okay, good. All right, guys. So, thanks for tuning in. I said last week I'm going to be streaming 5 days a week. And in keeping with how I am, I only streamed 4 days. But I'm making an effort to stream a lot more. So let's do 4 streams this week. Okay, that's a promise. All right, and like I said, Josh is working on some videos. I think he put out a video. I'm not quite sure. We have something right now that we're both working on that we're bringing to the market, which we think is will be very useful. Okay. All right, so let's get started. Thanks for tuning in, guys. If you're not a subscriber, you probably can't respond or talk. So go ahead and subscribe. Hit the like button. Just as a reminder in the beginning, I always say this. I haven't had my camera up in a little while, but I promise I will, and I'll be wearing my sweatshirt that says, this is not financial advice, right? So, as it says above, trading is extremely risky. You can and likely will lose your money. So, if there's 100 of you in here watching, maybe further down the line, this note, what the fuck? As I was speaking, I'm reading another screen and I'm reading note, but maybe this will change, but the rate of attrition in trading is similar to any extremely difficult pursuit that you're trying to master. So if there's 100 of you in here, I mean, chances are a year from now 5 of you will have made it. That doesn't have to be the case, obviously, but trading is extremely difficult. Okay, it's not for everybody. If you don't build a system, if you don't refine your edge, if you don't make a concerted effort towards stopping the mistakes you're making, or rather stopping yourself from making mistakes, you're just going to continue to do the same things, and you're going to be pissing away money while you're doing it. So, I always talk about how trading will be as difficult as trying to become a professional athlete. Think of anything else that has a very difficult path or high rate of attrition. The difference is, and what I want to say is, because there's a lot of TradFi folk that they hate on the crypto types, because honestly, crypto is an easier market to trade than if you're a rates trader, or if you're a equity derivatives trader, or an equity trader period, or trading even just the ES, or trading equity index futures. Crypto is the easiest market to trade. So they look over at crypto and they see something that is trades very technically, meaning the TA applies to crypto in ways that it does not apply to legacy at all, like pattern trading, like ridiculous stuff that is laughable in legacy markets. And people can come to this market and after a year be extremely profitable and make a ton of money. And that doesn't apply to other markets, really. I mean, you have to be an absolute savant, or just have an incredible amount of dedication, and still it's a very difficult path before you actually make something of yourself in legacy, and you really also, more importantly, have to be really well capitalized to even have a chance at doing that. Trading is a very difficult path, but go after your dreams, right? I mean, shit, you're only going to live once. I mean, no one makes it out alive, right? Bugs Bunny says that. So go after your dreams, absolutely. Right? If you have a goal, go after it. It's going to take some time. Anything good, right, is going to take time. Now, the difference is, right, let's say you grew up and you're, let's say you grew up and you wanted to be a baseball player, or you wanted to be a football player or a basketball player. Well, your path obviously involves a ton of practice. Probably, involves a certain level of favoritism in the gene pool, being naturally athletic, naturally gifted. If you continue to pursue that, it's going to be a very difficult path. probably the same rate of attrition, right? Maybe 5% of people that play high school football go on to play, maybe 20% of people that play high school football go on to play college football at a high level, and then maybe 5% of those players go on to the pros. Something like that, right? Now, in that process, they don't lose their money, right? I mean, sure, you can spend a lot of money. For example, golfing. If you want to be a pro golfer and you pay for Q school and you pay to travel, and let's say that you are a kid who wants to play hockey and all that equipment costs a ton of money and travel leagues. Yeah, you're going to be spending money, but it's not the same as a commitment towards trading where you literally are. If you're just losing nonstop, that could mean losing a small amount of money, or for some people that means them putting their life savings in and losing their life savings, right? I don't know what the fuck is going on with my mic. Hold on one second. Let me see. It's touching the screen. Maybe that's what it was. Let me see. All right. How's this? Tell me how this is. Yeah, I don't know. Is that what it is? Because I didn't change anything. All right. Mic is being bought the fuck out. Yeah. How's this? No, dude, the mic is very far away. I swear, you know what happened? Just all the settings changed. You know what it is? Actually, I don't know what it is. I was going to say it probably updated, but I didn't. Okay, better. Same, perfect. Well, I'm going to go with perfect. Okay. Yeah, all right. Well, I'll figure it out. Listen. Figure it out some other time. So, right, this is not financial advice. Trading is very difficult, yada, yada, yada. If you are interested in any of the stuff that I use, check out the links below. Phemex is down there, Phemex.trade. Great. So it's really funny because the chat comes through really late. So some of you are getting this and saying great already. Some of you are still saying that the gain is too high. You could hear the fans. That's my laptop. All right, adjust. Let's do this. Now I'm frustrated. Let's get this done. Hold on. All right, so sound. Jokes, it's still not perfect. Thanks, man. All right, so let's turn down. So I'm turning down the gain on the system settings. So now it's not reaching the end of that meter. So it's at 91. And now the gain is being lowered on Stream Deck. Someone is like, better. Perfect. There we go. Okay. Boom, there. Okay. I don't know how that happened. You know what? So this week, we're going to get to the charts in a second. This week, I've had the contractors in my house every single day. And I don't know what they're doing. So we have a bunch of new built-ins and bookshelves put in. And they're, putting up outlets and stuff for the sconces that go up and just a bunch of new outlets in the house. And they keep tripping the power to my office. So my computer has gone off, like turned off. My entire office, like half of it, has gone off a handful of times this week. So I don't know what's going on. Maybe like glitch something in the settings. All right, cool. All right, let's get it started. I'm sorry. This is a pain in the ass. So thanks for tuning in, guys. Hit the like button. It's been a long and drawn out beginning, but we're going to get into it. So the market is up today. Higher beta is up just because it's higher beta. I don't think that we're in a position right now where alts look very interesting. Some of them do. So by all means, feel free to share some alts in the chat, and I'll pull those up. But we're in a market right now that is, I think, most of the market is really just watching and paying attention to Bitcoin. And Bitcoin is paying attention to legacy. So I'm going to go over a couple things, just some thoughts. I was in a stream, not a stream. I was actually in a couple Twitter spaces recently. And it's interesting, like a lot of people, they build these really elaborate narratives or try to build really elaborate narratives for why price is doing what it's doing, rather than just one assuming that, just like anything else in real life, the truth is often boring, right? What's going on is there's a fair amount of randomness. Legacy is correlated to, crypto is correlated to legacy. Like beating that horse that, Bitcoin is only temporarily correlated to legacy, blah, 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 is pointless because it is correlated to legacy. So just trade what is, right? Don't trade what you want to be. Don't create really elaborate stories, especially with the high time frame and positioning. Just trade what is, okay? The market moved back down towards the lows of now like a year-long structure at a key weekly level. We should expect a bounce after this kind of drawdown. Legacy is not providing any kind of tailwinds. There's a lot of uncertainty. There's so much uncertainty right now. We have a few positive details that are worth focusing on, but price is just in a range, right? Don't expect price to be at 60K next week. We're taking it from level to level ultimately. This is not a technically driven market right now. There's no larger exogenous force that is that seems like it's present in the market. It just seems like it's very algo driven, and it feels like rather that the market is kind of just waiting for someone else to make a move, right? So you have likely a fair amount of cash on the sidelines, a fair amount of stablecoin reserves on exchanges that are waiting for something. And often, the market waits too long and gets involved too late. And, momentum traders are late to the game before, well after the turn. But it seems like most of the market is waiting for something bigger to happen. I think that we're showing signs that something is shifting. As a reminder, not saying that this is the bottom by any means, but these are what bottoms are like. They're not positive. Bottoms don't happen on good news. I mean, they don't. The only time, we could think of some examples where a bottom might happen on some positive news for BTC, but it would have to be such a large catalyst that, if you weren't already positioned before then, it wouldn't be the bottom anymore, right? We'd be well beyond it. I always name catalysts that are extreme and obvious because that's what it would really take to have a sustained move that, did not return back to sender. And that would be something, maybe a very significant corporate entity, adding BTC, being public about that. So maybe like Apple, might be a central bank, might be a series of sovereign wealth funds, but for the most part, markets don't bottom with one big piece of positive news and then just rip up. They bottom, the bottom is only really obvious in hindsight. And again, this is not a bottom call, but this is just the point is this is how markets are before they end up moving up, even if the move up is not something that's sustained for a long period of time. But we could be talking about a move up to 50, right? We could be talking about a move up to 47, okay? The point is, it's always, as I always say, it's always darkest before the dawn. It's always shitty before the market turns, right? Because ultimately what we want to have is, majority of the market positioning as if more downside is coming, right? And if not, if they're not positioning outright directionally, they're positioned outside of the market. And you have a transition of weak hands giving over BTC to strong hands. And that sounds kind of memey, but that's the truth, right? This is where retail gets out and, during times of uncertainty like this, waits a long time before getting re-involved. I can't tell you how many people I've seen that, after I said, a close above the 20, I was getting re-involved. I got out at 43, but since got re-involved, I can't tell you how many people I still see saying I'll be happier when we're higher. If we get up to 51, that's the point where I'm going to expect everyone's going to be bullish, and then the market would, let's say we squeezed up to 51 because, hey, 47, 46 is a good technical level, but Bitcoin likes to overthrow because the further up from the low we move, the more likely it is we pull in those late participants who, again, are responsible for that reflexive price action, right? Those late momentum participants. So markets don't bottom with good news. It's always crappy like this before the market turns and does well. Not saying, again, that we should expect prices to move up dramatically, but this is what it would be like during a bottom period, except, maybe you could expect more sideways action, right? So just trade what is, though. Okay, set your levels. If anything, this is not a technically driven market right now. It's a news flow driven market. So the problem is, especially with what's taking place in Ukraine, Ukraine and Russia front, literally, you have a lot of different conflicting information that's coming out, right? Constantly. Looks good. Looks like there's going to be no war at all. They're reaching a resolution. Equities move up, a few basis points. And then a half hour later, that news is inconsistent with what we've heard from such and such source. And the market moves down, right? It retraces. So it's very news flow driven. So it's not a very friendly market. This is not a market for novice traders. This is not a market for beginner traders. What I would say is, similar to my own approach, I have a spot position my idea is built around 43, right? So when we lost it, I was like, screw this, right? I think we're going to move lower. I had mentioned a target that would be 41.5, said that we could potentially sweep the lows, the lows post this move right here. So talking back down around the 40 handle. But I wanted that 43 level to hold, right? And I'll get into that in a second. But I'm being I'm having very high standards for price. And I'm really just trying to focus on the intraday from level to level, because you can see how this market's moving. It's rotational on the low time frames, but it doesn't really have any gas for any kind of sustained movement. So I'm not giving any kind of specific financial advice, but it'd be very dangerous to assume a lot more than what you get, right, beyond the first level. So that's what we're going to look at. We're going to look at some of the more significant levels, go over some of the higher time frame stuff. I'll look at some charts, look at the low time frames, why we saw this move earlier, what were some of the signs, or on the low time frames rather, why these levels are significant, and then take questions, and then throw out a few riddles and give away $300 in BTC, so 3 different people. Okay, so does this all make sense? First, the news-driven market, just trade what is, right? Just trade price right now. Don't get lost in narrative, right? Because like I said, I was in a space yesterday. This person just went on and on about this narrative that they were building, for why this was, this was the bottom, and they had a whole story. And the thing about stories is it's sexy, right? You want to have a story. It's the human mind, people, they want to have a story. Even when we know this is why testimony in courts doesn't really hold up, because even when someone has a story and there are gaps in it, their brain fills in gaps so that there's one cohesive, uninterrupted story. So mind you, there's so much that's obscured in the market. So building a story is it's a very dangerous endeavor. Just trade price. Yeah. Chimp space, yeah. So it's very romantic to have a story, because it's like if it resolves positively, it's almost like you were like a detective and you solved an equation. But there's so much randomness that takes place, especially in an algo-driven news flow environment. It doesn't make sense. Nothing is really that old on the chart, right? There's so much turnover that we really can't talk about too many positions from far back, because there's so much turnover that there's not a whole lot that's compelling from like a derivative standpoint or a microstructure standpoint to really build a massive case. Everything that's worth building on is really local. So local, I mean, in terms of this recent transition. And that alone is good enough to merit a response from bulls, right? That we've had some kind of significant transition that we have not had in, going on a couple months. So this is the weekly TPO chart right here. So we're looking at, going on to the beginning of the year. So we are going into we're in the middle of February, so a month and a half in. I mean, all we did really. So this was a very bullish transition. Okay, initially a very bullish response, exactly where you would want to see this occur if you had, very hasty participants looking to get involved in a fast-moving trend. You would want to see the top side of the structure on a previous consolidation post-breakdown retested and acting as support. Okay, this level is still, right? You should just treat this like a range though, right? So this was a prior value area high, value area low down here. Okay, the market had been impulsing, consolidating, impulsing before this transition, before we had a pretty obvious shift in positioning down here. But then the market reaccepted back within the lows of this range, moved up to the high, retested the high of that value area, right? You don't even have to use the value area. I mean, just look at the structure. You don't have to use my system, or just look at market structure, right? Lows of this reaccepted back within, consolidating. So, if you're looking at this again against the structure, if it's coming at the structure from below or at the structure from above, usually this kind of price action leads to expansion in the direction that it came from. Not in the direction that it came from, but in the direction that it was originally traveling. So this is just basic consolidation against resistance. All right, and this was being pretty adamantly faded on the derivative instruments. So break above the value area high of the structure, you're basically accepted outside of this prior consolidation. So that's like the first big shift, right? The whole market on the way down has been transitioning a series of lower lows, lower highs, consolidations leading to impulses down, and no ability to reclaim any previous areas of market structure. So consolidation, important contextual level, significant area of participation, significant reference point, whatever you want to call this. This is an area where price moved sideways for around 3 days, 2.5 days, where the bulk of that distribution was for these 3 days, right? A bunch of risk put on there. The highs acting as resistance, right? Price being cut off all the way down at the 20, right? At this point, at a diagonal that was pretty clear. So transitioning above this is, it's the first sign that you should be really paying attention. The first sign that you should have been paying attention should have been down here if you were looking at microstructure, but that's a little bit more nuanced. But if you're just a market structure guy, market structure girl, market structure animal, whatever, this is significant, all right? This is where I was looking to see whether or not this was just going to continue, right? Wanted this to hold. And my idea was not if it breaks 43, that it means it's coming all the way down here. I had my levels laid out, right? I just didn't want to hold in the gaps. So previous range, right? Or rather, excuse me, just this bubble is the high and the low of that prior value area. So losing that, what does it mean? It normally means you're just going to go back within the range, do what you did prior, right? If price had been ranging here previously, we moved up, retested the high, lose that level, then what are you going to do? You're probably going to visit that low. So the idea wasn't, 43 breaks, like the sky is falling. The idea is, well, 43 breaks, and I think there's a high probability 41.5 coming. Why do I want to hold for that, right? I'd rather, I don't have to feel bad for cutting the position, because the market has been for such a way for so long now that it's okay to miss out a little bit, right? It's okay. There's plenty of reason that this market has been warranting caution, right? So this is actually, this flip and retest, really just lines me back up on the bullish side, at least in the short term. I think that if we're able to hold 43, that we're looking at least 46, 47. I think there's a high probability that, and this low volume node right here is what's cutting us off, right? I think there's a high probability going into that gap. So all the way back to the left, I'll roll this forward a little bit. Hold on one sec. That's this gap back here, right? So no real activity back there prior. Price moved through pretty quickly. And right now, just testing that gap, testing supply from there. And if you can imagine, why would that structure potentially act as resistance? Well, if you did have any underwater spot positions, let me extend this moving forward, from that breakdown, this is a chance for them to, and that was an area where we consolidated, from the end of December If the market comes back to this area where you have that kind of long liquidation structure and that kind of significant breakdown, you're probably going to have some trouble moving back up in that direction just because you have people that are like, nope, just wiping my hands. Like, let me get out of this for now and reevaluate. So you're going to be running into supply because you are ultimately, for the first time here, you're transitioning in a way you hadn't done prior. So it makes sense that the last level, right, the next significant level would, you could take it seriously as resistance because you do have, there's a high probability that there are longs that are looking to still de-risk, right? So if we look at where we are right now, just the weekly TPOs, right? So this prior structure on the way down, you have two and a half weeks, right? I said days before, but we're looking at weeks, right? Basically 2.5 weeks of consolidation, right, before this impulse down. If this is a serious transition, if this was a very bullish environment legacy-wise, then I would expect there would be a chance that this could move fast. So off of these lows, consolidate, week and a half, and then move up. Excuse me, I just burped. I don't know if you guys could hear that. But this is a very choppy market. It's a very sensitive market. So I don't think that Bitcoin is going to do anything out of the ordinary too fast. So this prior consolidation for those 2.5 weeks to the left, breakdown, balance, grind up, first big impulse week, now our first big balanced week. So if you look at where we are right now, we're just within last week's value area. And last week, throughout the structure, was basically, and it was on its way to becoming, half of the week looked like it was balanced up here. It was almost like you had two value areas, right? So it's kind of a normal distribution, not very clean, not very balanced, but you had balance above 43 initially, two moves towards the highs that were rejected, price rotated back down, temporary balance. This entire structure you could get away with saying is relatively balanced. Right now you have an impulse off of the lows, but to be honest, this is just a move that ends up taking us right back to the high of the structure, right back to the value area high. This is likely going to be something, in my opinion, that, and I said just earlier, this is probably a pretty good short, and it turns out that it was. I think that you end up rotating within and have something maybe along the lines of 2 weeks within this prior structure. Right? I don't think that we're looking at a market that's ready to just rip up. If this is a real transition, just look at the prior consolidation. Took some time to break down. The market does not. I think the market is, it's in limbo right now, right? So we just have 1 week of balance really at the value area high of that structure. If we're able to hold, let's just say 45, right, top side of this structure, if we're able to break and hold 45, right, or even I said earlier, if we're able to break up and then come back and retest the top side of the structure right around, right around 44.5, then I would expect us to look at expansion further up, right? But right now, it kind of just looks like there's a range in the making, right? So looks like there's a range in the making. This lower time frame structure is a little bit more exciting. So the market is, it's pretty boring. If we look at our move outside of this balanced area, so for one thing, just to be clear, this was a very nice composite that formed, right? So between 43 and 41.5, back within that prior value area, back under the weekly structure, extending back to, again, that's where my 43 level came from. So it's confluence between a prior weekly and a prior value area high. Break from balance like this. So you had inside day right here. Okay, neither of these initial moves resulted in much. So you had an inside day break here. Okay, that took out this low, right? Then you had an inside day break right here, rolled over. Right down here, you had a significant amount of selling. And I'm guessing that, once it looked like we took the highs, and again, the market is, I want to say that it's in limbo. So it's looking for a reason to sell off. It's looking for a reason to move up, but no one wants to be the first person to act. So after we broke above that prior day's high, this move involved a ton of selling. So if you look at this on something like a CVD, you'll see that there was a pretty significant divergence here. And really, all we did is come back down and test in this case, so after this breakdown, you had a significant CVD divergence. We had the squeeze up, and then on that break back to this high, the market retested the top side of that value area. If you're looking at the composite, right after that happens, so when you have a balance form, whether it's a 2-day balance or a 3-day balance, don't fade the first break of balance. So usually it's going to be the case that if you have a long period of days moving sideways, you could probably expect for a 3-day move, you'd expect a larger move than a 2-day move, right? So if you had a 2-day balance, you would expect less of a move, but in this case you had 3 days that were in relative balance, right? Held that 41.5 level, have a pretty significant divergence down here. So the first break of balance, and if we're just combining all these, looking at that, right? So this first move, you don't want to step in the way of that, right? You're really just going to start looking at some highs to take out, or if there are any anomalies or areas that price might gravitate to. Looking at high volume nodes, looking at low volume nodes, but you don't want to step right in the way of a break from balance, after it's been wound up. And in this case, this was a very nice composite, right? Some composites are, you're building composites loosely. You're looking for at least 50% value overlap. And this, you have, the best possible example. You have an inside day, almost complete inside value, right? But for the most part, value is very evenly distributed between that 41.8 and that 42.6 level. So a break out of that is worth respecting. This structure right here, so this morning, what did I say? I said the first area, if we're going to roll, that I would look to would be this VWAP. So that VWAP was at 43,850, right? 43,835 at the time. It was, it was changing because it's dynamic. But ultimately, this region, so that zone, is where you're going to look for the first response after you have a move like this, right? So when you have a move that is very strong, so a big impulse move, you leave this kind of breakaway gap, again, leaving a prior 3-day balance area. Market moves up strongly, gets decent distance from the VWAP, right? So if you were looking at a VWAP with like 1 or 2 standard deviation bands, you see that we're approaching the exterior of those bands. So the first area to get re-involved is a return to VWAP, especially after you have a significant change, right? So break from balance, in this case 3 days, so it's not like it was just a 1-day break or a 2-day break, which in that case, you're not expecting to have that much legs. You might have like 100 basis points move off of the VWAP. And this is the first area you're looking for a pullback to get involved for a more significant move up, right? If this level was lost, and again, this VWAP is significant because this VWAP actually perfectly lines up with the beginning of the impulse. So I like to look at VWAPs anchored from significant points. So anchored from a change in market structure, change in context, anchored from, it could be news, it could be some kind of news catalyst, because I'm just trying to focus on where most of the positioning is averaged around. Especially, if we have a move up and we're looking to see if bulls are in control, we don't want to see that VWAP lost. If it's an anchored VWAP from a break like this, right? If you're trading under this structure, it's very clear at that point any kind of bull control is gone, right? So if you had this kind of consolidation, VWAP is right here, and you saw, for example, open interest was going up. If we start to lose VWAP and you still have that elevated open interest and you haven't had any kind of change in positioning, at that point you could say longs are probably underwater, right? And if you're holding below VWAP, retest it or something, it's a bad sign. You're going to start to look for a puke or look for some of those longs to unwind and look lower. So that VWAP is the first target. The next logical target was down at these single prints. So the end of this impulse, left single prints here at around 43.3, going all the way down to 42.7. If this is a very strong trend, you don't want to see much of a pullback, but you definitely don't want to see price folding over itself where the impulse began. That's a sign of extreme weakness when you have an impulse and it just starts to collapse into itself. In a fast-moving market, this single print region is the area that you would look to get involved, right? For price to wick into. There was no real activity here prior, so you should see a very swift response by the market to bid this up in that region. You instead got this level right here, right? So instead got the view up. Now, locally, right? So the trouble is, I think, in this market right now, there's a lot of bulls, obviously, right, that are still just waiting for Bitcoin to, go back up to all-time highs or, begin a short-term trend upward. I think it's easy to get these crowded highs, and I think you should watch out for them, right? So if we look at just this more recent high right here, locally, so one, a structure like this, so you have a strong move off of the lows, right? So 43 is held again. But if we zoom out a little bit, just to put in perspective where we are, you're approaching a gap, right? So price should move pretty quickly through here, right? But I would consider that post move like this, that again, sort of like going back to that concept of the consolidation that we flipped recently, this move likely brought in a significant amount of longs into the market, right? That on the way back up the first time around, you're going to see some de-risking, you're going to see some trouble in the way. If you have a gap like this, but there's a long amount of time between it, that's a different story, right? But in this case, price, almost V-shaped reversal locally, right? If we were just looking at the last week, back up to the highs. So there's a high probability that you're going to have some overhead resistance just from some longs that are like, woo, I bought that breakout thinking this was going to 46. All right, I'm going to get out, right? So locally within the structure, though, I think it's important to understand that, after an impulsive move like this, what do we normally get? Again, it's not we don't have a catalyst. We don't have, really bullish market conditions. Things are going to be slow. I think we could expect more ranging. So even on a lower end scale, right, any kind of big impulse like this, and that's still stuck within a relatively choppy period, the last week and a half, any kind of impulse like this, I don't think we're looking at a market that's just going to one time frame continuously up. So what you likely get is, you get a trend type day, and then you're looking for 1 to 2 day bounce, right? And then you're looking to, again, play that sort of break from balance setup, right? If you have 1 to 2 day bounce, here's your value area high, and here's your value area low, right? Ideally, if you have some stops ran at both high and the low, so you could really commit to one side after, right? So again, I always say if you're taking both the high and the lows within a range, and you're moving further along and then gravitating toward one side over the other, it's probably the side that you don't want to fade, right? But we're looking at a day that just finished, and it would be, I think, silly to expect that, it would be silly to expect that we would just have this sort of brief consolidation before a much bigger move up. So what happens is, you get people that are just jumping at the bit. And what you had right here was a pretty drastic offside positioning with a couple areas where we had completed auctions, right? So market moved up and, no longer was the bid willing to chase price up. And this is all pretty local. So if we look at, for example, this is the XOTPO, right? You see that there's a substantial increase in open interest from this day. So as the market's beginning to shift, again, there are sideline participants on both sides that are looking to take both sides. You're going to see overall more participation come into the market, but it's obviously it's going to be on both sides. So you had, shorts covering here, longs getting in, but then in this consolidation, if we expand it, you had that delta divergence right here, right? So if we look at delta bars, I'll put this on a, oh no, I have it, here it is, sorry. So you had, let's reset that, just to point out the divergence. Trying to scale this one sec. All right. Okay, so here's your move up towards the high, and you can see I have a 30-minute footprint right here, right? So 30-minute footprint, here's your little divergence right here. So sorry, I wish that this was, actually I could just move this up. There we go. This is a tick chart. If I show you the time chart, it'll probably look a little bit more like the chart I shared earlier when I'm sharing it on Twitter. So let me just put this to 5 minute. Sorry, bear with me. Okay, this is the area where we share that divergence. All right, you have a ton of selling right here, and price is unable to move lower. Right, just a strong move, right, and then initial selling and fading. You can see on the derivatives that there was a good amount of negative funding across the board, which is, these are all good signs, right? So that's why it's hard to really still be overly bearish, because for the first time you have these faders that are standing out more. But what I really wanted to point out was the break of the high. So sorry, I had some difficulties for a second. The break of the high right here. This is your 30-minute, one sec. This is a 30-minute candle. So you can see the amount of participation we have above that high. And then this is my tick-based chart. So buyers are getting aggressive towards the highs, and you can see there's 2 times where once we got above that 44,750 level, once we got above that, price never went bid. Right, so we see 2 0 prints back to back. You know that there's a lot of buyers coming into this level, right? Buying towards the high. All right, and you know, once price loses that pocket of volume, it's very easy for this to roll over. So in hindsight, it's always easier to see in the 15 or 30-minute footprint. But this is, you know, just a case of people buying, ultimately thinking that you're going to get a breakout a lot earlier, right? And you had a few delta divergences within the structure that were just initially building up, so there was a strong case to be made for a good amount of stops being above this high period. This is desktop. So I mean, looking at this right now, so this is an example just to give really quick. Let me zoom this, make this look a little bit better. This is not what I would want to see. So for set this, not exactly how I want a low to form yet. You know, you have a good amount of volume at the low, but price is able to still stay holding below where most of the volume came in, and we're still ticking down. So I think that at this point, now that we've taken the high, so now that we've swiped this high, I think you have to look back down towards these lows, right? You have a single print right around 43.80. It's not a real single print, actually. It's depending on your tick setting. But I would still look, honestly, for this region to get swiped and then potentially still find support there. I don't want to say, you know, how many times have we seen it where, you know, something like this happens and then we just get a market falling back down on itself, you know, after the initial trend day. I think we have a decent bid right now. So I wouldn't anticipate that happening. I think that this is your low, right? This is your, you know, this is your high, this is your low. Take the high now. You know, it's likely that maybe we wick into this prior structure, maybe tap just below this single, right? Right again around that VWAP, and then maybe see another response off of that structure. Sort of anticipating that, you know, what we get, like I said, is, you know, trend day, consolidation up here, and then the next day being a more balanced distribution, you know, as part of a consolidation that's a little bit more defined. Right, so we just began. Now, the daily open right now has been, just trying to get better at transitioning between these, has been pretty one-sided, right? So if we look at what we have right now, the daily open is all the way at the high. I don't even think we have a wick on this daily. No, we don't. So, I mean, not for nothing. Not saying this has to happen. This would be more likely for like a weekly structure. But chances are that you don't just leave a daily candle behind without a wick at the high. So we opened up around, you know, today's open was, one sec, I am also on another chart, but I know I'm going to refer to this up here. Today's open was around 44.6, 44.5. What is today's exact open? Today's open is 44.560. So just one opening drive down. And really what this is basically a Dalton setup that's taking place. But it didn't really give you much time. I mean, if we look at this setup, just on something like a, you know, very low time frame chart, not even a, you know, we'll look at, yeah, we'll put on like a 1 minute chart and just see how much time this was actually given before it rotated through value. So Dalton setup being prior value area high, price opening up outside of value and falling back within the prior day's value area, and being that we had a pretty balanced end of the day. So here's the open, here's that value area. All we have right here is really 1, 2, 3, 4 minutes of battle before price just lost support under that level. It's not a bad trade to take, honestly, if you're slightly late to that. Because, I mean, if you're looking at this on like a tick chart or a low time frame chart, so for example, even if you say like, I want 5 minutes of commitment through that level, and a Dalton setup is, the textbook Dalton setup is a, you know, 30 minutes basically, or 2 30-minute rotations. But if you're looking at this level and it's acting as resistance, there's no reason why you can't take the setup if you don't have some other, you know, I guess, complementary details lining up. So for example, here's the value area high, price opens up outside of. A Dalton setup is, you know, 2 TPO rotations inside of this prior value area high, and what you're looking at is basically covering the prior value area. In this case, you know, you have a bunch of trapped activity at the high. If price falls within the prior day's value after this exhaustive push up, right? And again, early in the structure, so not expecting price to just take off and start trending again. If you have that above you and you're trading back within value, I mean, there's no reason why you can't take this setup, right? So break below 44.5, right, or 44.450, and then have something where your stop is above that level, and you're looking at least the point of control, right? Because with the Dalton setup, on a balanced day, I mean, if we're going to break this structure down and say what would be the most likely full move of a Dalton setup, probably back down to the single print, right? So there's your balance. Here's your acceptance within. You'd really be looking at a target of something like this, right? If you're looking at it's a better case when you have a prior balanced day. So this is obviously, this is a strong move off of lows, very wonky distribution. But this is honestly where the lowest I would expect and before an initial cutoff, right? So that 43, again, just like I said just a second ago, but on the other chart, 43.8 again doing a job at being support. But you could take this setup, right? So when you see that there's those trap longs at the high, place your stop above that level, and then you have your entry. You could drag your stop down once price stays a little bit more committed in the structure, but at least it's like, all right, you have a setup, you have some reasoning to assume this might have some power to unwind, and then you're looking at least, a move down to 44.1, right? So that is that's a 1.5 R trade, right? You're risking 1, gaining around 1.5. So it's not bad. And that's the tight take profit. That's if you assume the midpoint of the structure would act like support. But again, after this kind of move, I don't think, I think you're just going to rotate a little bit longer. Let me just look through the chat real quick. Fly heel, can you call it one-sided? I don't want to confuse you and say one-sided because, this was basically, just a matter of the day ending and price being in the process of unwinding anyway. What I mean is it's just one directional, right? So one-sided, I just mean it's been moving in one direction. I don't mean that like price opened here and then it was just very clear that bears jumped on this and we're auctioning this down. I just mean that from the open we haven't done anything but move in one direction. Yeah, there's obviously a transition that occurred from yesterday's close immediately to today's open. So FOMC tomorrow. The next significant meeting is in March. Unless you're talking about something completely different. Yeah, there's no... Oh, minutes. No, the significant thing to focus on is in March. Chop, just look at the rotation sizes. So, the market's... for example, like if you look at our average sub-period rotation for each day, right? So looking at like a 30-minute ATR, it's like $200. So $170, $200, $220. So the average 30-minute rotation size is like going back to what it was in September 2020. I used to know all this because I built a pretty big pool of data with regard to that. So just getting an idea of ATR on the low time frames. So our rotation sizes are really small. So that's, one thing. And then another thing is there's liquidity is it's a little bit thinner right now. So small rotations, less liquidity, not really good trading environment. Unless you set your expectations obviously a lot lower. And this is why I don't have a problem taking profit after 3, 4, 500 point moves. It's like, all right, this is why I always say focus on what your daily, what your 30, if you're trading intraday, if you're looking at a TPO chart, for example, your 30-minute ATR is a pretty good reference point to at least what you should be grateful for, right? If you capture a couple multiples out of that throughout the day, it's a good job. When reels. Shortly. So many fuck ups in the beginning of the stream. I almost want to make it private so that no one can watch it after this. It's terrible. So yeah, small rotations, overall thin books. So, think about that. Small rotations, and it doesn't really take us much to cover that distance in terms of effort, so it's not really that attractive. There's some trap of short right now. Yeah, I don't know. It doesn't really look like that. I mean, so this is just a session ATR, so it resets. But you're basically just looking at yesterday's, what did I just say? Session ATR? No, I meant session VWAP. Just look at yesterday's VWAP. It's kind of still right in that same region. I would expect, though, that honestly, after this tap, that you look to tap this low. Again, just assuming that price is not going to get up and just immediately go from here. And we're already back within yesterday's range after failing at the high, so. Sand. Let's take a look at sand. Yeah, there's really no alts right now that are compelling. FTT, excuse me. FTT on the high time frame, I don't know. To me, it kind of gives me the impression of, let me turn this some of this stuff off. This kind of gives me the impression of a bottom forming. A little bit more clearly than a lot of other things in the market. You just have this nicely defined region, low volatility, picking up in volatility. I think it's just a well-defined structure so that, in the case of back here similarly, and I don't mean, this drawing, you can't see it off the left, but just looking back at the prior structure at the low, this general region where all this activity is taking place going back to November, I mean, at this point, if the market is to trade above, let's say 50, and cover where all of this supply has come in, I don't know, it could be a really good signal for the rest of the market, honestly, too. Because then what you're looking at is trading back within a prior range. And that's what you're testing right now, the underside of that structure. But it's being bid up a little bit faster this time around after the strong move off the lows. So, if you just look from a left to right transition, excuse me, big move that sliced through, no real bid stepping in the way of that, grind back up, completely recover that region, and now upon being rejected at the high again, it's not a real rejection that stands out. And immediately price is kind of bid up, a quarter of the way down. So I don't know. I'm always looking for, and I think FTT might be a good example of this, of the sign of strength that is leading the market that isn't BTC. And it's sometimes there are some cases where we have that, and it could very well be something like FTT. But I mean, sand. this general region, right? So weekly, daily levels. I mean, right now there's not a whole lot of reasoning to trying to jump at this early. You have that running diagonal down from the high. Basically just testing the underside of this range that we were within, going back to December. You know, maybe this is an early play at a breakthrough, but just assume that it isn't though, right? So, you know, a clean break above, I think I said 5, sets up some further upside, but I think it's dangerous to talk like this and be like just very formulaic with alts right now, where we're saying like, oh, if we break this, we're going here. It's like, you know, chances are 99%, 95% of them aren't breaking that level that they have, right? So yeah, if I was gonna say something that I don't think I should say on the internet. It's like, yeah, if my mom had a blah, she would be my dad, right? But it just isn't the way, that isn't the case, right? So yeah, if we flipped 550, sand would look awesome, but chances are we're going to break down lower. So Diego, I think that in terms of higher time frame levels, I think this is just a really good transition right here. So March all the way down, breaking out of the diagonal above the 20, big move here. Non-farm payrolls should have left us moving lower, right? Because it was really negative news. Again, wide range of opportunities for the Fed to, you know, expand the runway, tighten a lot sooner, and instead, no, right? So, I mean, we're looking at obviously probably 50 basis points in March, but point is a positive move off of really negative news, and now seeing that this is this shift in this level is taking place, right? So once very defining level, now acting as support. So 52. So if we just zoom out a little bit, just to go off some of the low volume regions. This whole low volume region, right around 51, 52, I think would be an area you could see that price could overthrow to, but you would see ultimately us cut off there for some time. Again, absent any kind of major catalyst, which again, I don't think we have, but you have to say that because you don't know about a catalyst until it, you know, broadsides you out of nowhere. But the thing is, like, the underside of this structure seems like the obvious next resistance. But this breakdown, like I said, you know, where we spent a fair amount of time and there's a lot of people that thought the market was bottoming right here, there's a, you know, good case to be made for spot looking to de-risk in this region, and you're getting that right now, right? So any longs that were underwater, spot positions looking to get out of break even, this area right now is sort of doing that. So chances are, if we were to expand upward from here, this consolidation, we would just extend the same idea that we do with any kind of lower time frame range or, you know, balanced region, where this region, where this high volume node is, if we were to accept above 46, right, and we almost got 46, if we were to accept above there, you'd probably cover this structure pretty quickly, and that leaves us, that opens the door up to like 51 and up, right? And what I think is, like, the more we consolidate around here, the more likely it is that this resistance that looks like the obvious resistance to sell is the dangerous one to sell, because this is the first significant change we've had. This resistance, that's the first significant resistance after this change, would be the one I would expect to go. People to fade too early, as too obviously. So if we get a consolidation against this region, where price is gravitating up towards here, you know how Bitcoin just likes to overthrow, right? It's very reflexive, and then you get one of those big candles where suddenly people that are sidelined are wondering if 52 is where they have to jump in. This is where you have one of those huge kickbacks because you get a bunch of late participants in the market. At this point, if we had a strong extension up from this area, I would imagine it would be built kind of, it wouldn't be very balanced, right? It would be a poorly built structure moving vertically to the top side of this prior range, right? So the difference would be, I guess, how we transitioned into this structure. So something where you're floating up, and like some YouTubers draw really precise paths for price. I don't really get that because I don't know. It's just I'm implying that if we consolidate against this region, so just choppy consolidation, that it's possible you get one of those big, impulsive candles all the way through it. Versus, like, let's say that we impulse through here, and then we come back and then retest this structure, and then it's like, I don't know. Maybe we look for a failure again at this level, and we break down from there. We don't get as much of an overthrow. No. The 20 MA is just like it's a really good line in the sand to discern for the higher time frame trend, like who's in control. I mean, if we put it on right now, we haven't had any kind of definitive close above it until recently, unless you go back to December. So, but otherwise, retest, break above, failure, retest. It's a dynamic level, so it is priced, right? It's just an average. But the actual moving average itself, right now, pointing upward, flattening out, is a good thing to focus on if you're like a trend follower, if you're looking for more of a concrete signal. What volume script? This? That's just a volume VPVR, volume profile visible range. Yeah, I would look for something like right here initially. Swipe of that. If you could get that, I mean, you're just looking back up at the top side of that structure again. But the truth is, like, this 43 level, I think, is a really good level. So this is all just one big range right now. This is kind of your midpoint of that range. If you lost 48, coming back to this gap wouldn't be that big of a deal. And then I would still just play this like a range. Your 20 MA, which is, could act like dynamic support if price comes down to it, is lining up rather nicely with the underside of this structure. So so best tip off to get out of a trade early when scalping. If you have a 2-3R target but see momentum slowing down. I mean, honestly, if I'm scalping and the market, if momentum dries up and we start trading even below where some of our more recent buying activity has come in, so new activity, and if you're looking at OI and you're seeing that is new positioning, new business coming in, if I'm scalping, a lot of times I close at the first sign of trouble. And if I'm scalping, it's the same thing as like me manually taking myself out of position. If I have, for example, like short this and looking at this activity up here, right? So look how much volume is up there, period. So putting on a volume probe, I don't, I have the bid ask on, I have the delta cluster, put on whatever helps you, right? So this really shows you the amount of activity that we have up here. I mean, if we just put on like delta or volume, you'll see that there's a bunch of participation, right? So let's just say that for example, it's just, let's scale this down, but it works in the same way. You know, if this is if I'm looking at a short scalp, this is my criteria to get involved, right? So let's say to the left, we've just taken out a high. This is the break above that high. And honestly, hammering short this, my exit is just if we're back above this level, right? Because this is my criteria. Like, they are unwinding and they are helping the move unfold. So if we're back above them, I just pull myself out. In terms of momentum drying up, or you know, ways that I would get out of a trade early, it would be momentum drying up or any kind of possible absorption before the idea that level I have in mind for price to cover to. So, you know, let's say that this is my short and my target is, 43. It doesn't look like a setup yet for this because there's no real major absorption that's taking place. Selling that's coming in is moving price down. So it's not a case where we have the inverse of this. But let's say, I'm short from this level and then we get something like this. And this is a 30-minute chart, but imagine this is like a 500 tick or 1,000 tick or a 3-minute or 5-minute chart. If we get this in the opposite direction, like price is halfway to my target and we get something like that, where you get a bunch of sellers come in and then price is suddenly holding that region and then we're, boxing out above there. This is all the selling, bunch of volume down there. I mean, I might pull the trade off on that alone, especially if it's not far in the direction of my ideal target or the area that I have in mind, just because chances are it's just going to run back towards my entry. I'd rather get involved again with a more precise setup. My VPVR setting is nothing special. I just have low tick. So that's my setting. Row size 150. That's it. I like colors that are kind of muted, so. Colors are usually a distraction for me. What do you think if we close the CME and sweep 40,009? No, I don't. Listen, I think, like I said, this is significant. The significance of this honestly goes back to the starting point, right? So lows, highs, all the way down, we're unable to break this series of impulse, consolidation. This is the first time you're able to do that. So retake a level, right? So I think that, for example, it would not be abnormal for us to test this gap. But if this is a trend change in the making, and it's going to continue at least in the near term, you shouldn't be rolling back over where the area that brought this level of involvement into the market. So this is the impulse that got the move started. It's reasonable to expect you could say, for example, we consolidate here more. It's even reasonable to expect that you could wick into that region. You just want to see that if this was a very active region, that the same level of excitement shows up again. Now, the more that you roll back down towards the beginning of something, the less excited people are going to be. But on the lower time frame structure, on the high time frame structure, these gaps, you return back to them. And if we came from the low and you return back to them from the high, these are the areas that you would honestly look to act like a good buying opportunity. So I just don't prefer to stay involved through all transitions of these levels. So when 43 lost, I could have been wrong, right? But I hung on the idea that 43 broke, then we're coming back down to the underside of this range, right? And then we're just going to do the same thing we did back here. And so we did, right? We slightly front ran it, but sure enough, when 43 gave way, we just moved back down towards 41.5. I mentioned in a stream 2-3 streams ago that this honestly would be a great buying opportunity. So something, let's say we range a little bit longer and then we wick into this region. I think this is the scariest one, but it's probably the best one. The point isn't that I think that we can't do something like this if we're going to move higher. My whole thing is I don't want to hold in between. So when I say 43, I still think 41.5. I still think 40 handle. I think those are all reasonable areas to get involved, and that this is not invalidated just because 43 broke. I think that this would be invalidated if now we're trading back below this region where the transition has occurred, right? Say for example, so just very clearly 20 period right now, so that significant dynamic level, which very well in a bottoming pattern, so be prepared that maybe this does come back down here. And the 20 period is just flattening out right now, which is, reasonable. But I would be, I guess, more bearish, a lot more bearish if we lost the 20 period and started accepting into this gap. So this is the kind of gap, so this kind of gap right here, a local gap, it's kind of a vacuum, so it's from this region. This is the area, this is the kind of gap where I look at the ledges to see a response, right? So we have actually two good examples. I mentioned this in the last stream. You have low volume nodes like this that are sharp, and you have low volume nodes that are caverns, or they're, canyons, just wide sort of buckets. These ones on the way up, so these low volume regions, I expect these to act initially as a kickback, to cut price off. That is at the low point though. So at the low point. So in the region, right? Never a line in the sand, just a zone. For these, I look for the response at the ledge. Because otherwise, this is like a double distribution setup. If we were to take this entire, from the 24th to today, it would look like a double distribution. Right? I mean, I could put on, just to show you, I'll put on the profile composite from here to here. It's a double distribution. So 2 periods of balance, gap in between. This gap should act as support. If you accept in this area, you just look back towards the next ledge. So 40, let's say, like, for example, because you have to expect you'd get some type of run, right? So some type of stop run. I mean, you don't want this to fall below, like, honestly, I said 40 handle, but it's more like 41, right? So 40, 50, 41. I mean, give it maybe that much room. But if you start, if you start accepting back within this region, you're probably just coming back down here, right? So it's not that 43 is the level for this to be bullish. It's that it is the local level. And it was the one that allowed me to take the most off because it was the closest level to the high that we put in, right? And it would be the most bullish response that we could have initially. So lose that, went down here, lose this, lose like 41, come back down to around 38.6. And then just honestly looking from one sticky point to the next, right? Yeah, I mean, trading below 39 should worry everybody. If you trade below 39, this stop has not been run, these stops have not been run, and it doesn't have to be. The point is uninterrupted lows. There's a chance that you do have a good amount of liquidity down here. Same idea between below 41 though, right? So that's what makes this region attractive. It's the area where there's probably a max fear. So it looks horrible when you accept into it. Maybe you do something, maybe if we rotate higher, the market ends up coming back down here and you get one of those big candles that very quickly leaves that region. But it looks horrible while it's happening, right? But I mean, if you lost 39, You're just looking at this low. And the problem with doing that is like you have a completely different story at that point. I mean, it's like, oh, this was another lower high. Shit, we're going to 25. You know, then these lows are just panic breaks, right? They just cascade. Just be open, right? Because it's a long process. It's going to be it's probably going to just be a long, shitty year. I mean, there's no reason why this can't be bottoming out, right? But there's no reason why the bottom has to be this, right? Something like that. There's no reason why the bottom can't be something like this. You know? I mean, remember this? So, I mean, so for example, from the low of the structure. So, from that low, I mean, it's somewhat arbitrary, but where is hold on one sec. So from this low, the initial move down, 26 days in. I mean, 26 days in, back here, puts us to basically that throw up there. This went on to bore the shit out of a lot of people. This was a lot different, though, because this was a one-sided move from the highs for the most part, uninterrupted. These are good signs, right? When you have green candles to the upside and choppy behavior, you know, choppy effort trying to move down. But I don't think we're looking at it. I don't think you're looking at a crypto winter unless you're looking at an equities winter. It's just right now they're related and they're not going to go backwards. The good thing is that maybe things like what's happening in Canada, it sounded funny, Canada, maybe that's the next spark for more Bitcoin adoption. I don't use multi-time frame moving average. I mean, I've used every moving average you could think of just to get an idea, but it's easy to backfit. But I just look at the 20 period. From time to time, I'll throw that on. I've thrown on a hull too, like a hull 55, but I like the 20. I don't know what head and shoulders someone was talking about earlier. And you could tell that I never really focus on these because is it this one? These are not things that I trade. Is this a head and shoulders someone's going to talk about? I mean, at that point, you don't even need to worry about that pattern. If you ended up breaking these lows, you'd be fucked anyway. So space-time composite is a private indicator. Spaceman created it on Twitter. It's you have to purchase it. Yeah. Oh, okay, the last month or so. Oh, gotcha. Yeah, I mean, I don't know. Listen, to me, it's just like, whether that's like your inverse head and shoulders neckline. I think more people are just focused on supply zones, right? So whether you're looking at that and that makes you excited, I mean, that's good. But either way, I mean, you don't really need that. You could just say that we've had a big transition, and if you were to break above that level, that, yeah, it's very important because this is a prior range and we're accepting all the way up there now, right? Neckline at 44K. Yeah. I don't know. I wouldn't look at that and then override this level right here. I think the more pertinent information is where supply is coming in from this breakdown. Good tips on becoming good traders. I mean, so there's a interview that's being published, I guess, in the next week. I answer some questions in longer form. I'll share that with you guys on Twitter. That'll have some answers for you. fixed range volume profiles, you don't have to use Spaceman's tool. You could just look at fixed range volume profile. So if I just put this on, you'll see sort of the same thing. So when I was doing that double distribution, AVAX short. Interesting. Let me just fix this real quick. So just throwing some levels on this chart. Back within the weekly lows. And you're back under in that range, sorta. I would probably be more focused on what's taking place right here, though, with this sort of double top, maybe. Then assuming that this is just going to continue to break up. So, resistance. And then sort of a very one-sided move off of the low towards the high. You can see how that sort of happened the entire way up, with the exception of right here. But that was kind of accepting right into that gap at that point where it started to really get away. But this, I kind of would anticipate, does not have a one-way trip up. What you're looking at is sort of like the same idea with BTC. Prior composite, prior range, right? Breakdown, much wider shoreline with alts because they're looser. But now you're back at the highs. This is overthrown plenty of times. Just be mindful of that, but I would say something like this that overthrows and then is back within this cleanly. You're probably looking at, you know, a rotation down again. Yeah, I wouldn't short strong alts though that have been consistently strong. There's just so many other alts that are so weak that want to fall more, right? Visualize alpha, there you go. All right, let's do some riddles and let's get out of here. 3 riddles. Okay, rule is first person to answer correctly. And listen, there might be some latency on some of your computers, but it is what it is. So the first one that I see that pops up in the chat wins $100 in BTC. So we're going to do 3 of these. All right, and then I'm going to do a stream tomorrow, and it'll be a lot better than today's stream because I'll make sure that the sound isn't fucked up. All right, so first riddle. Yeah, I'll do another. I'm going to throw in more live scalping streams, excuse me. You know, late streaming might not be my thing because my brain is really, it's absent of, I don't have any caffeine anymore in my system. It's late here, but I just had a bunch of carbohydrates for dinner recently too, so I think my body's just, all the power is being put towards processing my food rather than providing power to my brain. But I'll do more live scalping sessions. I just mentioned last time, it's kind of a bitch to do streams and trade at the same time, unless they're just like trading bullshit position sizes, and you know, maybe that is the solution though, trading smaller during the streams, because then it's like I'm not paying attention to them as much. Otherwise, like scalping and streaming and talking at the same time. You guys see me when I did the Warzone streams where I can't talk about the market and play video games at the same time, or I can't, you know, it's either one or the other. So the other scalping streams I did that were really good, I just didn't really talk, right? Anyway. Yeah, so tomorrow I'll do an earlier stream. So, all right, first riddle. First person to answer this gets $100 in BTC. And you'll just have to message me on Twitter. Give me a second after because I'll have to... give me like an hour after because I'll have to open my DMs. Anyway, what runs around a whole yard without moving? First riddle. What runs around a whole yard without moving? All right, first person to answer this. All right, Meridian, good job. Okay, so Meridian, message me on Twitter in like an hour. All right. Meridian was the first person to answer. Okay. And everyone's coming in now. All right, Meridian's popped up first. Mike Pence, there you go. Okay. Ready? Well, Carl, like I said, listen, happy that some people got it right, but there's going to be different levels of lag between you guys, and whoever pops up on the live stream chat first is the winner. But I promise you, someone pops up first. Semi-random to begin with, right? I mean, not for nothing. How many of you guys can just immediately... Some of you know the answer. Some of you know that you could just Google this right away. Okay. All right. And whenever you message me on Twitter, you'll have to share your YouTube picture or something to verify that it's you. Okay, so next one. I'm in a corner and yet I travel all over the world. What am I? I'm in a corner yet I travel all over the world. You got it, Michael. Oh, nice. There you go. Sir Phytone. Good job. Time, toilet, stamp. It's all good. All right. Sir Phytone. Again, when you message me on Twitter, take a screenshot of your YouTube page, account, whatever, to prove that it's you. And then the last one. Ready? All right, this one is a little bit different. Not very different. If you took 2 apples from 3 apples, how many apples do you have? If you took 2 apples from 3 apples, how many apples do you have? Nope. Nice. Finally, some people are getting this wrong. Brian D wins. You take 2 apples from 3 apples, so you have 2 apples. I'm really happy that all of you guys are getting this wrong besides 2 of you. It's pretty funny. It means you're jumping too fast to conclusions. You're using system 1 instead of system 2. Some type of mental shortcut or heuristics or whatever, but it's not helping. Okay, all right, guys, that's it. This was kind of a messed up stream. Plenty of technical difficulties, but it is what it is. Tomorrow I'll be streaming at around 5 p.m. or 4 p.m. I'll share the time tomorrow. But until then, have a fantastic evening, guys. If you guys won, again, like I said, message me on Twitter in an hour. I have to change a few things. I'm going to step away from the computer now, and then just prove to me who you are. All right. Adios. Till next time. Till tomorrow. Good morning. Good night.